Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 30th of December, 2022, and the market is closed for the year. This is the unofficial number for the SPY. It doesn't include any dividends, but we finished the year with a loss of just under 20% for the SPY. It wasn't straight down. We had some pretty significant rallies, including 9%, 12%, close to 13, a 10% rally here, 19%, and then just in the fourth quarter, we had an 18% rally, but again, still down 19% year to date. Clearly, there were bear tracks all over this market, and that one is in the books. So let's take a look at the numbers for the markets overall. Here are the key ETFs. Again, these are unofficial numbers. These are for the year, not including dividends. 33% loss for the NASDAQ, 34% for the semiconductors. They tend to lead up and down. Oil was up 22%, especially after this big week this week with 7.8%. So I'm going to do a brief overview today, and I am doing a free webinar on Wednesday, the 4th of January. If you want to sign up, that link will be here on YouTube as well as my website and Twitter. If you want to attend that event live, sign up for it. There will be a recording, but it will only be available to people who sign up. That's it. There's no exceptions. You have to sign up. It's just going to cost you an email address. That's it. There will be no exceptions. So let's take a look at the action here. This week, we saw that the anchored volume weighted average price from the Federal Reserve last meeting was the exact place that we saw resistance, like we did last week as well. So this is anchored to the Federal Reserve announcement at 2:15 on, what was that, the 14th, and you can see that sellers showed up last week and then again yesterday. So now we have this market trying to find some footing here on the 15-minute time frame on the right, and on the daily time frame you can still see we've got a giant mess here. We're still stuck below the anchored volume weighted average price from the October low, June low. Those kind of come together in here along with the anchored VWAP from the August high. So those all come together in there along with this orange AVWAP from the COVID low. So it's really unconvincing. I mean, maybe we get a little bit of a rally, perhaps up to the AVWAP from the December peak, which would put us at about 387, but there's nothing really that I can see to be bullish about going into next year. Looking at the NASDAQ, same story, but this market is just a little bit worse off overall in terms of it finishing with, again, a 33% loss for the year. That's a big loss. And what we're looking at now on the 15-minute time frame is we've got a little bit of a rally here at the end of the day, and we've got a 5-day moving average flattening out, but we're still below the anchored VWAP from the Fed as well as the December high. We're below declining 20 and 50-day moving average. We're below declining 200-day moving average. We're down in this area where we're seeing a little bit of support so far. It doesn't mean it has to hold. If we break back down, then we could see a continuation into next year of selling. There's no indication that this market has made a bottom. I think the theme for 2022 is they probably scared a lot of people out. And in 2023, I think they're going to wear a lot of people out as the market doesn't just turn around and go higher. We still have a Fed that is not accommodative with their monetary policy. And it's going to be, as always, stock by stock basis. There's a lot of broken stocks. We'll talk about stocks in that webinar on Wednesday. By the way, as always, if you're watching this on YouTube, please give it a like, subscribe to the channel, etc. I'm also going to talk about my new book that comes out late January in that webinar and give you all details about how to purchase the book, etc. So, what formats will be available. I'll answer all your questions about that. But we remain in a bear market. That's the bottom line. The Russell 2000, it had the opportunity to possibly, make a recovery back here a couple months ago. It failed, and that's what's supposed to happen with a declining 200-day moving average, is that stocks tend to fail with a declining 200-day moving average. So, again, if they didn't scare you out this year, they're likely to wear you out next year. The intraday action turning a little bit more neutral, but what you see on the bigger daily time frame tells us there's nothing to be excited about here on the long side. Semiconductors, same exact story. We got hit pretty hard this past month, basically from the highs of this month that we saw. huge sell-off from 235 down to 200. And here we're starting to see maybe it's stabilizing, but there's no reason to be a buyer in here. You can always look at these shorter term timeframes and say, isn't that a shoulder? Isn't that a head? And that's a shoulder, and make a case for, purchasing. And, if you're looking for a trade, maybe you get a move past that level. But I would say that, if you're looking for it, you want to see it do this. Be aware of how it responds to the AVWAP from the Federal Reserve. If it can push up through there, be aware of how it responds to the AVWAP from the December high. And that will get you then next up towards the potential band of resistance, which was prior support in this 214 to 215 level. The market has a lot to prove next year. And again, it's not going to just magically turn around overnight. The biotechs were trying to recover. We spoke about the potential of a stage 2 uptrend based on it, breaking higher in here. It never gave us a good reason to be a buyer. We've still got a declining 5-day moving average. That attempted stage 2 uptrend has failed. So, you've got to listen to the message of the market, and that's what the successful investors and traders do. Be aware of your time frame. We'll talk about all this stuff in the webinar on Wednesday night. I promise it's not a sales pitch. It's going to be highly educational. I would encourage you to attend. I'll be talking more about the strategies that I'm going to be looking to use in 2023, looking at some individual stocks that might be setting up on a longer term basis. I'll still trade those, but maybe there's something that you can find as an investment if that's your time frame. Anyways, thanks for tuning in. Happy New Year, and I'll talk to you on Wednesday.